Would you like to learn how to trade so well that everyone legitimately will think that you are cheating? My name's Nick Sean. If you haven't been here to my channel before, I've been trading Forex and crypto and stocks for the past decade, and I've made millions of dollars in all markets combined. And what's more is I've actually shared all my trades and analysis and insights for free in my free Telegram channel. I'll put a link in the description and a link in the pinned comment so you can check that out. And you can just follow my trades live every single day for free. So what I'm going to do here in this video is we're going to get into it, and I'm going to show you how keeping things simple and control.
Nick, I would like to learn how to trade Forex so well people think I'm cheating.
Okay, yeah. I'll make the video and then we'll show you.
Well, yes, but aside from that, I would like to learn how to trade Forex so well that people think I'm cheating.
I understand. Let me make the video and then you can watch it and you can learn too. So
yes, but aside from the video, when will I learn how to trade Forex so well people think that I'm cheating?
Kirkland, give me the microphone back. Give me the microphone.
But Nick, it's very important that I
let go of the microphone.
Nick,
let go of the microphone, dude. What are you doing, dude?
It's very important that people learn.
Get away from
that I learn.
Why are you get away from the microphone? Aren't you supposed to be behind the camera, dude? If you're gonna sit next to me, you need to stay quiet the whole time. So what we're going to do is we're going to go ahead and get on the charts here, and I'm going to show you how keeping things simple and controlling risk is going to actually be able to help you make tons of money trading in a way that is so much more easy than most people are doing. Right now, we're on a GBP USD chart on the daily time frame. All I do is I use the higher time frames like the weekly and the daily and the 1 hour, and I just take basically bounces of these zones. Now here in my free Telegram channel, one thing that you can see is whenever you get in here and you start checking it out, the trades I take are incredibly simple. So for example, this is a trade I took last week on USD Canadian dollar, and you can see all I did was I sold whenever price got here into this resistance zone. So I was in this trade for a little bit, it started going sideways, so I closed it. But the basic analysis and the basic premise remains that whenever price gets into major support resistance zones, all I do is I sell if it's at resistance and I buy if it's at support. Trading this way has allowed me to keep things really, really simple for like the past half a decade since I began developing this trading system. And what I found is most of the things that people are doing, they don't matter. And they're doing those stupid things at the cost of things that really do matter. So instead what I've done is I've distilled everything down to keep it super simple. So that way two things are true. Number one, it is very easy for you to test and track these results. That is very, very important because it gives you a framework to then build your trading experience off of. The second thing is that by doing this, it allows you to actually be able to risk much more on trades. And by you risking much more on trades because you have more confidence and you know what your stats and metrics are, you will then be able to risk higher dollar amounts. And then the idea is that you make more money, provided that you have a proven edge and a profitable trading approach. So whenever you're going here through Telegram, you'll notice that all of my charts, like TradingView, is just black and white charts. I don't use any indicators. I don't use anything wild. And all I do is I just take simple bounces of support resistance zones, and they're very, very simple. And what I do is I've noticed that a lot of people who are here in this Telegram channel, you know, whenever I share stuff like this, what they're able to do is they're able to start actually drawing these trades themselves before I have even posted anything about it. And they're actually already looking to take the same trades that I'm looking to take. And this can happen in as little as a few weeks. And that's what the beautiful part about this is not only is it very, very simple and in my opinion, easy, another thing is that it's very easy for people to duplicate on their own. Currently, I've worked with over 4,600 clients over the course of the past like 8 years that I've been running this Telegram channel and running Mission FX, which is my Forex training company. And since I've been doing that, what I've noticed is the simple stuff is the stuff that works the best. So by posting all this stuff in here, it allows people to see the same stuff over and over and over again. So let's go ahead, let's go to the random number generator, and we're just gonna pick a random Forex pair. I've got all my Forex pairs here on the right side, so let's just pick a number between, I don't know, like 1 and 15. So we're going to generate that. That's 14. So we're going to go down to the 14th pair. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So USD JPY. Now we're going to go to the 1 hour chart because I have to use the 1 hour to be able to like watch the price action when price gets to these zones. I'm going to hit the replay tool and I'm going to hit start new, and this will take me back to a random location on the chart. So I'll hit random bar. So this is in September of 2023. Cool. Now I'm going to go back to the daily chart. And what I will be doing is I'll just be drawing up the recent zones that price is at, and then I'll just be buying and selling at them. So what I'll do, what I see right here on the chart right now is I see a support resistance zone below price right there on the daily. And then I also see a resistance zone up here where that high is. So whenever you're doing this in the live market environments, it's so simple, because all you have to do to make money hand over fist, the very first part is actually drawing the zones that you're going to be able to trade off of. So what I would then do is when I've got these two zones, I look at current market price, I look at the next clear zone above price, the next clear zone below price. I set an alert at the support zone below price. It doesn't let me put the alert here, so I'll just draw the horizontal line. And then I'll put an alert at the next resistance zone above price. And you'll notice my alerts are about halfway into the zone, just where most of the price action is. So then what I'll do is I'll let price go up to one of these zones, and once it gets close to it, I will go to the 1 hour chart to start seeing if price looks like it's rejecting the zone. And then if price looks like it's rejecting the zone, I'll then enter. So price gets up there into the zone, it starts rejecting. It looks like it didn't come all the way up to where my alert was, so I'm going to play it out a little bit further. It looks like it will try to drop from here, but if it gets up above, then I will look to enter. So currently price has had a bunch of bullish candles here at this zone. It's pulled back, it's pinned it. I'm going to wait just a little bit, and if this looks like it's going to drop from this resistance zone, then what I'll do is I'll enter a sell. So let's see if price looks like it's going to drop. So it looks like it's getting a little bit weak here, so I'm going to go ahead and enter. Why does it look like it's getting a little bit weak? Well, price had a nice triumphant high here, pulled back, tried to make a new high and failed, just rejected the next high. Came back down, tried to bounce, but now we're just making lower highs, and now we've actually broken past the recent lows. You only learn these kinds of things through like contextual analysis and experience and discretion and intuition as a result of your applied experience. So you have to just be able to get experience doing this. That is why I run my free Telegram channel, because it gives you this experience in a real way. That way you can learn by just following my Telegram channel and by watching my videos and not trying to interrupt the videos when someone is talking, because it's not your video, it's the other person's video. So what I'll do is I'm going to go ahead and enter a sell here, and right here I'll enter a short position. I'll put a stop loss above the resistance zone, and then I'll put a take profit at a 1-to-1 risk reward ratio. Now, an interesting fact about this is that I tell people you can't predict which way price is going to go. It's 50-50. Price either goes up or it goes down, and support resistance cannot predict which way price is going to go. So people oftentimes ask me, Nick, if it's just 50-50, then how do I know that price is actually going to bounce at the zone? And my answer is you don't. And then they ask me, if you don't and it's 50-50, how is your system profitable if it's a 1-to-1 risk reward ratio? Well, it's because of what I'm about to teach you right now, which is called dynamic trade management. Dynamic trade management is essentially you watching the trade play out after you enter on the daily chart. You then go to the 1 hour, provided that prices looks like it started to reject. And then if price starts going against you, you can exit the trade early before the stop loss. Sometimes you break even, sometimes it's a small profit, and oftentimes you lose about a third to maybe a half of whatever the stop loss was. So when you're risking higher dollar amounts like me, which is anywhere from $50,000 to $75,000 per trade, what happens is you can actually turn your losses into maybe a third or a half on average of what the stop loss is. There will be times that your trade just hits the stop loss anyway. And that's okay. That's what a stop loss is for. It's there for in cases of emergencies. But what this does is it gives you room to monitor the trade. It still gives you a max risk threshold, and it also gives you an easy target. You don't have to target 1-to-2 or 1-to-5 or 1-to-10 or 1-to-69 risk to reward ratios, Kirkland, because a 1-to-1 risk reward ratio is just much easier to get hit. It'll get hit quite more often. So what we're going to do here in this video is we are going to go back here to the 1 hour. We're going to play this out, and we're going to watch candle by candle what price action does. And the idea will be that we hold this if it looks like it's going to fall to the target. And if it looks like it's going to go up towards the stop loss, then we're just going to close it a little bit early. So let's see what happens. So price starts going down for now. It's halfway to the target. It could make a higher low here and go back up. So we need to pay attention. We're going to see which way it goes. Okay, so in this case, it falls directly to the take profit. So let's break down a couple things here about this very simple trade. For example, let's say that I have started a $350,000 account, which I literally did 4.5 months ago. And then I've grown that account to about $350,000 in profit before swaps and commissions. And all of this was documented in my free Telegram channel. So with that, I was risking about $25,000 to $50,000 per trade on a $350,000 account. This might seem high risk to you, but again, based on what I said in the beginning of this video, how to make so much money people legitimately think you're cheating, part of doing that is using your experience as your edge to allow you the confidence and the certainty to risk more per trade. Instead of risking 0.5% to 1% of the account per trade, which will grow the account and is a very safe way to do so, you're just not going to be making money hand over fist as compared to if you use your intuition, which is that little magic edge that comes from your experience to identify trading opportunities that present a high likelihood of resulting in a profit and a lower likelihood of resulting in a loss. And even when you do lose, you try to lose a little bit less. By doing this and risking higher dollar amounts, such as, for example, $50,000 on a $350,000 account, it would take me roughly 6 or 7 trades to actually blow that account. And that's if I didn't dial down the risk to 25K per trade. Doing it this way, even if you lose those 7 trades in a row, at least half of them, if not more, and in some cases even all of them, are likely to just be partial losses. So when you win bigger, and then whenever you lose smaller. This is the age-old Forex trading and crypto trading and stock trading advice, which is to cut your losses quick and then hold your winners a little bit longer. So this one worked out. If it had started going into drawdown against me, what I would have done is I would have tried to have closed this trade a little bit before the stop loss, maybe break even or a third of the way or even half the way. And again, sometimes it will hit the stop loss. So we're going to go back here to the daily chart, and you'll see how, since I only use really clear zones, I'm not having to play around with anything like this right here. I'm not having to play around with any hairy price action where it gets into one of these little zones and it's technically bounced a couple times, but it's spiked through a bunch. And sometimes zones like this will work, but I just prefer not to trade them just because they have a lot of volatility at them. I just look at the daily zones, and if the daily zones look like they're going to bounce, then I enter a sell or a buy, and then I basically just ignore all of the lower time frame zones that get created. So now what you'll notice is that price now looks like it's going to break above this zone. So the fact that it looks like it's going to break above the zone, what does this mean that we do? Do we sell again? Is it okay to sell again? Do we ignore the trade since it just bounced at this zone already and now we've made a higher low and we're going back up? The answer is not black and white, and there's no absolutes, there's no right or wrongs in trading. The answer is going to depend on your experience. Now, in this case, this might be a trade that I skip in real life, but what I'm going to do is I'm going to show you how to structure this trade. We're just going to take it anyway, and then I'm going to show you what I'm going to do if it starts to play out versus if it starts to lose. So let's say you're trading on a $10,000 account. An example of like a little bit higher risk per trade would be anywhere from like 1,000 to maybe, 1,000 to 1,500. And if you really want to be really risky, maybe even $2,000 on a, what did I say, 10,000 or $1,000? Okay, so $10,000 account. So 10 to 20% risk per trade. Now I know that sounds obscenely high, but it's important to remember that whenever you're doing this, once you have experience, the amount of experience you have dictates the risk. If you know what the stats are and you know how to manage losing trades by getting out of them a little bit earlier and then letting the winning trades run all the way to the profit targets of just 1-to-1 risk reward ratio, which is basically nothing. By doing that, you will become confident so that way you can risk more money. And then once you are profitable, you can start making money hand over fist and quickly compound your trading capital and your trading account. And so with that said, that is one of the reasons why I said at the beginning of this video, you'll make so much money that people legitimately think you're cheating because you're just using your edge to be able to make that money. You're using your experience and discretion. So we're going to take this trade anyway. We're going to go ahead and enter a sell. We're going to enter it right up here. And then what I'm going to do is I'm going to give this a little bit more room. I'm going to drag the stop up there. I'm going to drag the profit target down here just before this little recent low. That way, in case price just chooses to come back here and make a higher low and it doesn't fall a lot, I'll still be able to get out of this trade. So I'm going to enter here. We've entered a sell at the daily zone. I've just dragged the stop loss out a little bit further. So now we're going to click through this nice and slow, and we're going to watch very carefully what price does. So it starts going against us. We have this little high right here that price just went to. We're going to watch that. If it breaks above that, that's not a good sign. So it's broken above it. And now we're going to keep an eye on it. It tries to pull back. It looks like it's trying to paint a higher low. We're going to zoom in just a little bit here on the 1 hour. It's going sideways at the zone, starts to go into profit. So what do we do now that it's in profit? We do nothing. When it goes into profit, hold it to your original 1-to-1 risk reward ratio. That's why we structure these trades this way. If you're using a 1-to-2 risk reward ratio, your profit targets are further and your stop losses are closer. And what that means is you're going to take more losses more quickly as compared to being able to manage it dynamically. Sure, effectively what it will look like in your actual P&L stats if you're profitable doing this is it will show your average win might be about 1.5 to 2 times your average loss. But that does not mean that it is more optimal to structure it with a 1-to-2 risk to reward ratio. Because if you're just doing that and letting it hit stop or target, you're missing out on all the potential trades that would have hit an earlier target because it went halfway to your 1-to-2 risk reward ratio. And that would have been a full take profit had you been doing it this way. And you're also going to be stopped out of trades that you could have gotten out at break even because the stop loss was so close. Let's let this play out. It could turn around at any point and start going back to the upside, but for now it started to go into some profit. So we're just going to leave it alone. So it looks like it's making a higher low right here. So we need to keep an eye here on the 1 hour chart. It comes all the way back up to the zone, all the way back up to our entry. Let's see if it starts to break the high or come down. So it tries to make another sweep down. We're making another higher low, and then in this case, it ended up going down to the profit target. Now, to be fair, this is probably not a trade I would have taken in real life, just due to the fact that it already bounced here at the first zone. And since I'm risking so much, I try to be very careful about exactly what I'm doing. But this just goes to show, by entering, by using proper management, you'll still have trades that just work out based on the stats. So currently, if say you run a $10,000 account, even if you just risked $1,000 on each of these, right, it's 10% of the account per trade, which I understand it sounds like it's a high percentage. But again, this is after you get experience, you back test this for 3 to 6 months, you follow the trades and analysis I post in my free Telegram channel, you will be able to quickly start being able to duplicate this because of how effortless it is. You barely do anything. I don't even use any indicators. I use black and white charts. I'm even able to make this video here still and be focused while Kirkland was interrupting me at the beginning of the video. That's how simple and easy this trading strategy is. Now, have you learned anything so far, Kirkland?
I have learned a lot. I would like to continue to learn a lot in how to cheat in Forex trading.
Sweet. All right. So in that case, I will continue recording the YouTube video here. All right. So let's go ahead and wrap this up a little bit more. We're going to take one more trade, and I would like it to be a trade that doesn't work out. So what we'll do is we'll take a trade that is a little bit like worse. Let's just take it off of a little worse zone. That way I can just show you how I manage things if they don't play out. Price comes down. Let's see if it can get all the way down here into the next zone. So it goes all the way down there into the next zone, but it spiked past it real quick. Did it pause on the 1 hour at all? Basically, no. We just had straight bear candles just running through the zone with no clear pause. So I'll tell you what, since this is still a clear zone technically, and price still tried to interact with it briefly, if price pulls back down here into this little support zone, we will enter a buy. Okay, so let's see what happens. So price comes back down. Let's see if we get all the way in there to where that alert would be, and it pins it perfectly. So it hits the zone, and then it tries to bounce. So what would this be? You might call it a break and retest. You might just call this a fake out from the daily zone. It came back above, and now it's come back. But it comes back into the zone, and then it starts to push up. So what we can do is, as it hits that zone and then starts to bounce, we can enter as it's going up, because as soon as price is just showing that it's trying to go up, then it's fair enough. I'm going to put my stop loss nice and clear below this zone, and this means the profit target has to be up here at a 1-to-1 risk reward ratio. So now we're going to watch this very closely on the 1 hour time frame, and we're going to watch candle by candle to see what it does. So it's going sideways, comes back to the entry, breaks the recent high there. Now let's see if it holds. It does not hold, and so now it's come back, and now it's broken the recent lows. And in this case, this happened so quick that there's virtually no way that you would have been able to have managed this. If price started going against us slowly towards the stop loss, then what we could have done is we could have just gotten out a little bit early. But the fact that that didn't happen still, allowed us to have the stop loss protect us. What happens after this? Price continues going lower. This would have resulted in a bigger loss at the max point, double of what the actual risk was. And that is certainly no way to trade. Let's actually see what happened right here. Price gets back here into this little resistance zone, a little support resistance zone. So what we can do is whenever price gets back here into this resistance zone, is we wait for it to get there, and it goes, and it would have hit the alert because the alert's right there in the middle at that yellow line. And then we have to wait for price to pull away. So price starts pulling away right basically 2 candles after it gets there. So somewhere down here we could have entered as that candle's going down. We put a stop loss nice and clear above the zone, and then a profit target has to be all the way down here at 1-to-1. So now we're going to monitor this trade, and if it looks like it's not going to work out, then we're going to get out. And if it looks like it is going to work out, then we will hold it. So it looks like it's still trying to go. It makes a set of lower highs. Do we do anything at this point? No, nothing. Let's see if it can just crack one more lower low. Struggling to do so. Starting to go sideways. Here we go. It's trying to make a break for the low again, but we're painting little higher lows in here. Not a good sign. Tries to start going up. We're still very, very weak in terms of price action here, so we need to just kind of see. And then it finally ends up breaking the lows and dropping out. So this one ended up working out. And you'll notice the trades that work out generally don't have a lot of drawdown. Whenever we go back and we see these ones, you'll see that basically nearly every single one except for this one, since they worked out, they started going into profit relatively quickly and they just went straight to the target. That is why it's a big deal to not close winning trades early. Now, another thing here is that this one went into a little bit of loss, but it didn't start having like quick candles going against you and candles going sideways for too long. How long is too long? Generally like 2 or 3 days, just in my opinion, if you're trading on daily chart zones. Then price went into profit. It came back to the entry, had another drop, went to the profit target. This one, you'll notice, it had price start going up initially into profit, and there was nothing we could do there. Then it came back down and started going sideways, and then we had what was probably a news candle. This was a news candle going against us that ended up hitting the stop loss. So there's nothing we can really do there. That's what the stop loss is for. It protected us from having a bigger loss because who knows, price could have gone all the way down further. And then right after that, we got another setup at the same exact zone. That's why it's very important to just use these super clear, obvious support resistance zones. When you're using the nice, clear, obvious zones, those ones work so much easier and it's so much better to make a profit because they're just very clearly defined and there's a lot of orders and liquidity at those zones, which is basically just people entering buys and sells. This one, and we entered there, and basically from the moment we entered through the whole trade, the trade remained in profit. We didn't do anything. It didn't come back anywhere near close to the entry. If it had gone to the entry and started going sideways or trickling upwards, we could have gotten out of that a little bit earlier, just above the highs there at the zone. What I'm going to do now is we're going to wrap this up. And let's say that you had a $10,000 account, you risked 1,000 on each. You made 2,000 here, then you lost 1,000, and then we made another 1,000 back here. So it basically came out $2,000 in profit because we had 3 winning trades for 1,000 minus 1 losing trade for 1,000. So it's 3,000 minus 1,000. It came out on $2,000 profit. So over the course of 4 trades on one pair, GBP USD JPY, from the 1st of November all the way here to the end of December, this is a 4-month period. So this is about 1 trade every 2 weeks on this pair on average. And you have 24 to 26 Forex major and minor pairs. You get plenty of trading opportunities to do this, even though you're trading on the daily chart. And since you're not trying to be a hero and have a huge risk to reward ratio, things work out a lot easier and they work out a lot more quickly. So over the course of a 2-month period, we were able to pull a 20% gain just from USD JPY, risking 10% of a $10,000 account. And the cool part is as you dial up these numbers even more, so you have a 100K account and you're risking 10,000 per trade. Imagine a trade that goes to the profit target and you win $10,000 on it. And then if it goes against you and you lose it, you either break even or you lose $3,000 to $5,000. And sometimes it hits the stop, just like this one here, and you lose the full 10K of risk. You keep on dialing up the numbers and you get to the point where I'm at today, which I'm not even that far in my trading journey, and I'm a decade in. I'm only risking 25 to usually 50 to 75K per trade. But even with that, it's beautiful because as my capital continues to grow, I'm going to be able to continue risking more and more per trade, all the way up to 100,000 per trade, 150,000 per trade. And the stats and the metrics work regardless of where you're at in your trading journey or regardless of where you're at in terms of capital. As long as you do this and you keep things simple and you structure the risk like I've showed you here in this video, even though trading is risky and most people lose money, the people that can effectively apply what I've just taught you here in this video and show in my free Telegram channel will allow you to make money hand over fist. So much money that people will legitimately think that you're cheating. That's all I have for you guys today. I hope you enjoyed the video. I'll see you in my Telegram channel. Kirkland, you have any words for our viewers?
I don't think I have anything.
Give me the microphone.
I think.
Let go of the microphone.
I think what I
Stop
really,
it. Don't do this.
Actually.